Hey, welcome investors to the 40 Finance channel. It's been a rough couple months for Chinese stocks in general, particularly if you're holding shares of Alibaba, which went to a new low of like $73. But things are on the up right now. Just last week, the Chinese government voiced their support that they would help try to keep the shares of their major companies on the U.S. exchanges. And that voice of support has really buoyed the Chinese tech names that once were so popular. Now, for me, a couple years ago, I held an ETF named KWEB, ticker symbol KWEB. Now, I sold out of my KWEB shares in late 2019 or early 2020, I can't remember, but I've always kept my eye on it. And then, of course, the past couple years have just been a very negative environment for Chinese stocks in general. But the question today is it time to get back into something like KWEB now that we've formed sort of a bullish pattern or a rebound pattern? Is it time to jump in and take advantage of perhaps the great Chinese stock comeback? Now, I will say for me, I still have my reservations about owning individual Chinese stocks. I just don't think we're probably done with all of the negative headlines so far. But I do think that KWEB offers an intriguing opportunity. So let's hop in and I'll show you some of the things that I'm seeing. Switching over here to Seeking Alpha, you see this headline from just 7 days ago, March 16th, China Internet ETF skyrockets 40%. And this is the reaction from the news that I mentioned earlier. The move came on signs of reforms in the rules Chinese authorities use to oversee the release of audit information for U.S.-listed companies from China. On the day, KWEB saw just shy of 100 million shares exchange hands, 5 times its daily average of 19 million shares. Now, very important to note that this news is not final. There's nothing here in stone. They are just working towards a resolution for some of these delisting concerns. So nothing has been formally approved, but the move could mark a crucial step forward after the unpredictable regulatory environment that has seized Chinese stocks over the past year. So I do want to call this out because I think, depending on when you read on the internet, you might have this feeling like, hey, everything's safe now, jump into Alibaba, etc. It's more of like an olive branch that's been extended and nothing technically has changed yet. Now, if you're not familiar, here's a quick peek of the KWEB ETF I keep talking about. It tracks the CSI Overseas China Internet Index, which consists of China-based companies whose primary business or businesses are focused on the internet and internet-related technology. So just to be clear, if you're the type of investor who's looking for sort of a Dow type index or a SPY type index for China, this KWEB is not going to bring you that. This is focused mostly on the technology companies, the big names that have been in the news, whether it's JD.com, talked about Alibaba, Tencent, etc. That's where this fund is focused on. Now, one recent move here that I really like that KraneShares is doing with KWEB, you can see this is dated March 11th. KWEB aims to fully transition to Hong Kong shares in coming months. So if you're going to invest in a foreign company with their American depository receipts, there is a little bit of risk there. So in my opinion, this move is becoming more organic towards the actual market that these companies play in, right? So instead of investing on the American depository receipts or the American version of the Alibaba stock, you are going to have a potential when you hold this ETF to have a share of the actual shares that are on the Hong Kong Stock Exchange. Now, what's interesting about this move is I showed you the date here, March 11th, right? That was a few days before we saw China come in with their olive branch. So that's how high the risk of delisting was for some of these companies. So KWEB, of course, trying to preserve their investments and their capital for their investors, was getting out of the American version of the stocks. And was that part of the game where the Chinese government maybe looked at it and said, holy cow, maybe this is more real than we thought. we need to come in and try to fix this problem. So this is a pretty big move for a relatively popular Chinese internet ETF option. And this pie chart, I guess, here shows you how big this change is. So this is 2021, where 25% of KWEB holdings were in the Hong Kong Stock Exchange, whereas March 10th of 2022, you can see they're already up to 66%. All right, before we talk about performance and valuations, here's your top 10 holdings. Tencent on top, followed by Alibaba, JD, BIDU, and MEITUAN. I believe those 5 right off the bat gets you to about 40% of the fund in general. So similar to like the QQQ or any other market cap weighted ETF, these top 10 in general are a huge part of the fund. In fact, the quick math says they represent about 60% of the total invested dollars. Okay, back to Seeking Alpha here, and I actually made a chart comparison between the top names, and I included the QQQ as well. So here's KWEB, and over the past 1 year, we have a return of minus 60%. And that also does include, this kind of rebound play that we've seen over the past 7 days. Now from there, we have Alibaba, minus 48%. It has actually outperformed KWEB ever so slightly. Then you've got Tencent. JD.com is the best performer out of these Chinese tech stocks. They're minus 18% over the past 1 year. BIDU at minus 40%. The QQQ over a 1 year period is plus 12%. And it's important to know a couple things about the Qs because I, of course, spend a lot of time on them. That does not include Alibaba or Tencent, but the Qs do include JD and BIDU, but they're at very, very low levels. Less than 1% of the holdings are encapsulated in those 2 stocks. Now let's take a look at things in a different way. Let's try to think about it from a valuation and growth perspective. And for that, I did a stock comparison here in Seeking Alpha. By the way, if you like some of this data that you're seeing out of Seeking Alpha, my affiliate link is in the description, gives you a significant discount, 50% off a 1 year subscription to their premium service. Check that out, help support the channel. But for this comparison, I've stacked up Alibaba, JD, Tencent, BIDU, and NetEase. And all we're trying to do here is just eyeball some of the signals in Seeking Alpha to see like, hey, are these stocks like generally undervalued? What is the sentiment? Because if they go up, particularly as a group, then we can expect that KWEB would do so as well. And Seeking Alpha has 3 types of ratings. They have their quant algorithm. They also have Seeking Alpha authors, which are people like you and I and financial advisors who write on the site. And then you have the Wall Street firms, which are the ones you see on CNBC. And across the board, outside of the quant rating, which is saying hold, hold, and hold, you've got a lot of buy signals here. So even though this is just an eyeball assessment, I would say very strong sign, at least coming out of the gate. Now let's scroll down and stack up the valuation metrics here. And you have non-GAAP PE for this fiscal year, projected at 14 for BABA, 31 for JD, Tencent at 24, BIDU at 18, NetEase at 19. So maybe outside of JD at the 30s, you've got 5 core stocks here trading under a PE of 20. Now, of course, how about growth? And this first line is year over year, so rear view mirror. This is projected growth going forward. Alibaba, 29%, JD, 22%, Tencent, 23%, BIDU, 13%, NetEase, 15%. So you've got a basket here of 5 stocks with double-digit revenue growth capabilities. And if we scroll down and we look for EPS growth diluted looking ahead, 6%, plus 22% for JD, plus 19% for Tencent. BIDU actually taking a step back at minus 11%, and NetEase at plus 18%. So just these simple eyeball metrics, right? We have relatively low PEs right now. We have revenue growth, the lowest coming in at plus 16%. And on the EPS side, if you take out BIDU, who's projected to have a minus 10% or so this year, everybody else is in the positive at both the top line and the bottom line. Now with KWEB, I do want to call out that they had a very strong dividend that came out after the 2021 year. It was $2.58, but I'm not so sure that that's going to be an annual thing, so don't get pulled into that. If we just go to their dividend history here in Seeking Alpha, you can see the 258, which occurred, that's probably the ex-dividend date of 12/28, but in 2020 that was only 22 cents, and in 19 pre-pandemic you were at $1.26, and in 2018 34 cents. So I just want to say that if you looked at this one and you're like, ooh, look at the dividend of $2.50, it does seem like you can expect a dividend maybe at the start of 2023 if you hold it that long, but I wouldn't get into this one for the dividend simply because, you know, that was a record high last year. So I would say the risk is probably to the downside. All right, guys, so bottom line, I don't cover Chinese stocks very much on this channel. I do not purchase individual Chinese stocks, but as I've been watching this play out over the past 7 days, you know, we weren't sure how far Alibaba was going to go. And I think that goes for everybody on the internet. You know, it just kept dropping. It got down to $75. And like a lot of stocks out there, Chinese or otherwise, there gets to a certain point where you're like, you know what, to hell with it. I'll take some just for it being this low in price. And for me, I'm still not super interested in holding one standalone Chinese company. I do worry that, you know, depending on which day you wake up, the government is going to pick on a certain company or a certain CEO, and that to me is a little too much risk. But with the peace treaty, so to speak, going on, where China wants to make sure that their ADR listings stay in the USA, I think KWEB's worth a shot here, particularly for an ETF that, you know, from a cost perspective, it's $30. I went ahead and bought 50 shares today with the goal of just getting to 100 shares of KWEB. Maybe I can play around with the options and make even more money. Didn't look like the options were particularly volatile, but this one at least had enough of a market cap that it still does have weekly options, at least from what I could tell. All right, guys, so that's my take on KWEB, Chinese internet stocks as they stand right now. Let me know if you're interested in purchasing any of these or if you're just going to stay away because you're worried about the risk. Hey, before you go, don't forget to look at that Seeking Alpha special offer with my affiliate link down below. Also, please give the video a like, share with your friends. Thanks, everybody, for watching. We'll see you on the next one.